Hello everyone. So I'm just gonna send in the link to premium as well as free. Beautiful. We'll see if anyone wants to join. We'll give it a couple of minutes and then we shall get started. There's only going to be a couple of fundamental bits to touch on. So obviously we had the Fed speech yesterday. You're right, Artemis. Beautiful. So we'll just quickly read through an article that kind of summarizes it. All in all, it wasn't kind of out of the unexpected sort of zone. They have obviously just taken more of a stance in terms of a realistic stance and dealing with the situation. They know they now have to really step in to keep things under control and bring things back to kind of normal levels. So they are full steam ahead in terms of actually dealing with inflation, and obviously they now know or fully know that they need to obviously cut back on spending as well as rate hike. So kind of the picture that we got from the speech yesterday was that obviously just the points that we just touched on, and also we kind of have a clear sort of picture between now and March. So we shouldn't really be seeing anything unexpected until, the way that they've kind of worded it is that they are going to be putting in sort of seeds or kind of give sort of ideas as to what the market should expect so that they can price things in before the actual data comes out or the official sort of announcements come out. Just basically what they're trying to do is not shock the markets. They want to keep it as stable as possible. So they have got the markets in sort of their head. So that's what they're trying to kind of look after moving forward. So that's what we should expect. Obviously, in March moving forward, we are going to be seeing rate hikes, and potentially by the end of year being at 1.25 basis points in terms of interest rate. We are expecting 5 interest rate hikes of all 0.25%. So we'll see how that plays out. Obviously, that's what they're planning as of now. But obviously, things will change depending on the specific circumstances that we are in or the US are in at that time. Okay, or leading up to the time of a potential rate hike. Okay. So if you watched it, amazing. A lot of questions got answered, and a bit more clarity was given. If not, that's okay. We'll kind of touch on an overall picture in this live stream. And then we just want to then go over what we're seeing in terms of what's on the news outlets. And that is a bit more FUD coming out in terms of crypto, okay, and quite important one. Again, we're getting this picture of the whole energy usage come to light again and more so, okay. So that is the biggest issue right now, and that's what's going to make markets extremely volatile, okay. So we got a article that we just pulled up from Bloomberg that was put out today, so we'll go through that and then we'll go over to the TA Obviously, we're on Thursday. Only one more day or one more official day of trading. So this live stream will give you an indication as to what is to be expected going into the end of the week as well as over the weekend. Okay. Amazing week in terms of the premium channel. 6 winning trades, 1 losing trade. 5 winning trades, 1 losing trade, 6 trades overall. So very, very good week. I think we're on probably roughly maybe just underneath 600% net profit over 6 trades, which I mean, we haven't exactly been going in and out the market loads. It's 6 trades and we're pulling in nearly 600% in net profit, okay, which is fantastic. So well done to all of those snipers. And majority of the profit was actually made on Monday, so one day into the trading week, and we made majority of the profit for the whole entire week, which is even better. So it's been a pretty chilled out week, which makes things a lot easier. Obviously, towards after Tuesday-ish, okay, we got a little bit of volatility. Not on Tuesday, sorry, yesterday. Obviously, at the start of the week, we got a decent amount of volatility, and then Wednesday, after the speech was completed, we got a bit more volatility, and we capitalised on a little bit there. But ever since, it's been very, very slow. So, yeah, we can't do much when the market isn't doing much. So, what's the point? We're trying to capitalize on not exactly major moves, because we're using leverage. That's the whole point of using leverage, is that we can capitalize on smaller moves. But in terms of price movement in crypto, it has been very slow. So we're just creating a range now. So things are slow. There's a bit of mixed emotion. Not a lot of people are getting involved. So what can you do? But nonetheless, we fully capitalized this week, which is amazing. So perfect. So we'll just go over obviously the news articles. There's only 2 of them. And then we'll dive into DTA. So, scroll up. Just wanna have a little look on this. By the way, guys, Wi-Fi will be sorted as of next week, and we just also wanted to touch on the fact that Glassnode is going to be purchased tomorrow. So going into the pre-market analysis either Sunday or Monday, we will be going over some Glassnode charts, which will actually benefit all of you because they basically aggregate a lot of data into basically graphs that kind of give you a better picture as to the whole market and sort of the overall macro movements in prices, influxes of money, which gives you a better indication as to what these institutions are doing at this quite crucial time in crypto. Okay, we are very much at crucial points, price points on crypto. It's make or break, really. So it is quite essential that we kind of use as much sort of data as we can to kind of get that better picture and more perfected picture as to what these institutions are doing. So that will be integrated into these live streams going into the pre-market, as well as obviously the premium members will be getting obviously print screens and everything else when those collections or collated datas are put together. So another amazing sort of integration into the premium channel. So If we just go to the top, so Fed kicks off most aggressive global tightening in decades. Okay, so nothing that we haven't been expecting. We were expecting it. The only thing that we're taking from this is obviously the fact that they are now fully realizing that it needs to be done. Okay, so they're taking that extra step, and now they're actually putting getting ready to put it into place. Okay, so central banks poised for a series of hikes after Fed shift. Markets face bumpy ride as asset values are already stretched. Okay, so Federal Reserve Chairman Jerome Powell fired the starting gun for potential the biggest and fastest tightening of global monetary policy in years. His hawkish shift included not ruling out US rate hikes at every meeting for the rest of 2022 over the next week. Above a half dozen other central banks, including the Bank of England, are set to raise their own benchmarks, and more have indicated they will follow in the coming months. Okay, so this is a global matter quite clearly. So as you can see, obviously the biggest economies are looking to obviously well, this is the most recent, so they're holding rates. So obviously the US held rates in yesterday's release, but obviously they are posed to be raising it. China actually cut down rates and are actually increasing stimulus, so they're taking a different stance, but obviously they have a completely different matter to kind of deal with over in China. Ninja, hello, how you doing, my man? You okay? Beautiful. The coin fucker, Glassnode, great news. Yes. You will see the full potential benefit of it as you are in the premium channel. Amazing. Artemis, hello. Ollie, beautiful. So Powell's comments were a major warning for investors that the central bank comfort blanket is really being taken away this time. Even with equities wobbling, bond yields rising, and concerns mounting that higher borrowing costs will dent growth. The Fed chair didn't blink. So I think the US data that got released today was 6.9% GDP growth, I think it was, which is quite huge, to be fair. But obviously they are pushing for near full employment levels. So again, as expected. With monetary guardians making clear the scale of their concern about inflation, the path has been laid for aggressive action. This tightening cycle will be different, said Dario Perkins, an economics at TS Lombard in London. The authorities may want to hike interest rates much quicker this time round. Okay, so who knows? 5 rate hikes is what they're saying right now, with the potential of it being more. Obviously, they're going to be dealing it with what they're seeing at the specific time, and no one can really predict the future. So things are more than likely to change as we move forward. The last global cycle was shortly before the 08 financial crisis, but this time it starts with economies already at full capacity and inflation way above target, setting up the prospect of the most rapid global rate hike cycle since the 1990s, Perkins says. With price growth at 30-year highs in the US and the UK, markets expect the Fed to raise rates 5 times this year and the BOE 4. The latter is expected to announce a second increase in a row to 0.5 next week, which is quite mad. So do expect for volatility to kind of be ramping up in the markets as we move forward and towards March. This year is going to be a very, very, very big year in crypto, and not just in crypto, but just in financial markets in general. Okay, so there is big money to be made. So buy those dips and just build that portfolio up. Okay, things are going to really go big this year. Hello, Bunny Gaming. Hello. So that level also triggers the possible start of unwinding of quantitative easing, add another layer of policy tightening. Okay, that was already known. PNB Paribas, Global Chief Economist Luigi, also expects that it's the case. It's a case of this time is different. He's now predicting 6 Fed hikes this year. Okay, so bit of a chart. The tightening trend is evident almost everywhere. Bank of Canada Governor Tiff McClem signaled Wednesday that he will increase rates in March, and investors are pricing in more after that. South Africa raised borrowing costs on Thursday, while Hungary also increased rates. Singapore unexpectedly tightened policy this week, and Chile delivered its biggest rate hike since 2001. Australia is expected to scrap its bond buying program next Tuesday and could lift rates as early as May. The global shift toward tightening will pile pressure on the European Central Bank, which remains an outlier and unlikely to hike before 2023. China is also going against the grain, cutting interest rates to support economic growth. Okay, so quite an interesting way of going around things, and it's going to be quite interesting to see how these economies actually come out in 1 to 3 years' time. Okay, the impact of what their decisions of the decisions that they are making now, and the outcome. So one thing to kind of keep an eye on. Okay, previous guidance from the BOE and others that rate rises, when they come, will be limited and gradual, is becoming to look like a relic from a different era. Powell repeatedly said that the economy is quite different this time and that policy will need to be nimble. Perkins said financial markets should brace for a bumpy ride, which, volatility is what we love. We love volatile markets. It's where the money is to be made. What do you mean by drawing for the VIP member? Let me know, Bunny Gaming. Just give me a little bit more clarity on that. And then I can answer your question. So, inflation is well above target. The economy is already close to full employment. Asset valuations look stretched. Unless the equilibrium interest rate has collapsed, which seems unlikely, the authorities might need to tighten policy more forcefully than investors realise. This poses clear risks to the financial sector. Okay, rapid tightening will heighten concern that central banks are heading for a painful policy mistake. Perkins compared the looming cycle to former Fed Chair Alan Greenspan's stand up and be counted moment in 1994 when central banks tried to tighten financial conditions more forcibly. That policy quickly backfired as growth dipped, he warned. So I agree with policy having to tighten policy more forcefully. However, one, it's different time. Two, banks are a lot more prepared nowadays than they were back at this time, or even the 08 crisis. Okay, a lot of regulations come into place, so they are definitely a lot more prepared. From that, the only thing that they didn't really expect was the whole virus. But then again, how can you really prepare yourself for that? Obviously, they have experienced that, and they will now be adding some sort of layer in terms of pandemic outbreaks to their stress testing mechanisms. So that being said, unless something that is completely unexpected comes to light, and I couldn't even think of anything, then banks are more than likely a lot more prepared than, let's say, previous to the financial crisis, where stress testing wasn't really a thing. Okay, So that being said, that kind of gives you a picture as to what's happening, not one, just in the US, but two, just the globe in general, and obviously the largest economies going. So expect volatility to be increasing, okay, but not to be worried as long as you're kind of staying intact as to what's happening in the world. When data is going to be released and important data is going to be released, and reading in between the lines, as well as obviously putting together your TA and what you can see, on the chart. And obviously, if you do not have Glassnode or you are not in the premium channel, I highly recommend you go and purchase it so that you can kind of have a bit of help in terms of reading in between the lines and looking at what these institutions are doing. They are always 2 steps ahead of the game. Okay, you need to understand that. So they will be doing stuff previous to a big move in the market. So you can stay with the institutions as long as you kind of read those signs and know how to read those signs. And Glassnode, for instance, will help you with that. And then obviously good TA and understanding what's happening on the charts will also add to that picture. And finally, obviously the fundamental side of things, and kind of keeping intact with these news articles. So next news article, top Bitcoin miners pressed by US lawmakers to detail climate impact power consumption. So miners facing increased criticism while Bitcoin's value has plunged almost 50%. Bunner Gaming, do let me know what you mean by when will you do another drawing for the VIP member. Don't know exactly what you mean by that, so do let me know. So a group of Democratic lawmakers led by US Senator Elizabeth Warren is demanding details from 6 of the world's biggest Bitcoin miners about their electricity consumption and greenhouse gas emissions, a warning shot that comes amid growing concern over the cryptocurrency industry's environmental impact. So if they do decide to actually give this data out, I guarantee you they'll skew that to make out that it's really, really bad. And they'll give some stupid comparisons to kind of make out that it's extremely bad, and that'll be the extra push that it needs for it to go down to that level that we're saying, almost anywhere near 20,000. Okay, that is very much on the cards. Just do remember that. The 8 lawmakers sent letters Thursday asking miners, including Marathon Digital Holdings Inc. and Riot Blockchain Inc. to provide their facilities, annual electricity consumption, growth plans, and impact on local power prices. Cryptocurrencies have come under increasing fire for the industry's power consumption, which is now comparable to the entire country of Argentina. So, I mean, it's literally one country. Like, I'm not saying it's exactly great, but it's not of great concern, to be quite honest. There are things out there which are a lot worse for the world that kind of need resolving. And if they resolve that, okay, that will offset obviously the cryptocurrency mining consumption, energy consumption, as obviously cryptocurrency grows as well. We also do need to kind of remember that cryptocurrency is very much new as well. So in terms of advancing into a greener way of mining, will take some time, whereas there has been plenty of time for technology advancements into sort of producing greener energy, which, I mean, has already been done, but for what reason haven't we moved quicker in that space? So there's bigger things to worry about. It's just FUD. Just putting negative news out on crypto That's what they want. So let's have it. We trade futures, so we make money going up, we make money coming down. It's all money to us. So where were we? So the letters raised. The letters raise the stakes in Warren's campaign to crack down on wasteful Bitcoin operations after she sent a similar request last month to Greenidge Generation Holdings Inc., which powers its upstate New York facility with a natural gas plant. They also come as the industry reels from Bitcoin's about 50% slump. Given the extraordinarily high energy usage and carbon emissions associated with Bitcoin mining operations raise concerns about their impacts on the global environment, local ecosystems, and consumer electricity costs. wrote Warren and 7 other U.S. lawmakers, including Representative Katie Porter and Senator Sheldon Whitehouse. The letters also went to Stronghold Digital Mining Inc., Bitfury, Group Limited, Bitdeer Technology, so on and so on. The miners have operations across the US and in countries including Norway, Russia, Japan, and Kazakhstan. The letter to Bitfury's Chief Executive Officer Brian Brooks asked him to provide details on the company's electricity needs and climate impact. What is your projected electricity consumption for crypto mining across all of your US facilities combined over the next 5 years? What are your projected associated carbon emissions for that mining? The lawmaker wrote. Brooks defended the industry's energy consumption before a US House subcommittee hearing this month. Bitcoin mining consumes a small but non-trivial amount of energy relative to the amount of value created, and that energy is on average drawn more from sustainable sources than the US electricity grid as a whole. So there we go. We've got bigger fish to fry in this world, and we're picking on something that's relatively a small fish in the pond. Okay, mining uses powerful computers to solve math problems and order transactions. Okay, we know that we're the fastest miners rewarded in Bitcoin. The biggest miners have operations with tens of thousands of computers humming in warehouses that resemble data centers and consume vast amounts of electricity. The letters come as Bitcoin miners face a crucial challenge in the wake of the token's 50% plunge from an all-time high in November, while many mining operations made a handsome profit during Bitcoin's gains over the past year. The slump may punish those with less efficient operations. The letters were also signed by Senators Maggie Hassan and Edward J. Markey and Representatives Rashid Tlaib and Jared Hoffman. Okay, so take what you want from that. But yeah, not great news. They are obviously coming for crypto mining, so it's going to be something that is major to the volatility and price action of Bitcoin. So make sure you stay intact with the movements of this. So we've got Glassnode. I think most of us wouldn't be able to read between the lines and keep up with the institution without a proper interpretation like the one you provide. I'm happy it will be in VIP. Yes, too right, my man, too right. Unless you're experienced, it is very much hard to read in between the lines. But that is why Glassnode does help. If you know what you're looking at, because Glassnode, there is a lot of different charts. However, every single one has its own purpose. But again, it's more like looking at influxes of money into exchanges, into Bitcoin, and outflows, and obviously the levels of outflows and inflows of money. That's what you kind of want to really be looking at, and that's what Glassnode will enable you to kind of stay in touch with. It's also the fact that so let's say when we go on Bitcoin longs and Bitcoin shorts, as you can see just to the left, okay, when I hover over it, if it works, no. So This is linked to Bitfinex, okay? So this is only one exchange out of the multitude of exchanges that there are, okay? This is obviously a very big exchange, so it's quite reliable. However, it's not giving you the entire picture, okay? And what Glassnode does is that it basically collates all of that data for you and puts it into one chart. Okay, so it gives you a better idea of the overall market. Okay, that's why it's amazing. But again, just like you said at the end, I'm happy it will be in the VIP. You're obviously going to benefit from it, as well as all the other VIP snipers, as it will be available to all of them as well. And obviously, as time moves forward, we will be obviously keeping an eye on these charts on Glassnode, and any sort of anomalies that kind of come out at the time. You guys will be the first to hear it. It is more a premium on the go service, but we will be including and talking about them obviously in our live streams, so that at least the public have a little bit more value when it comes to obviously watching these live streams. We're trying to add value to these live streams as we move forward, because they are important to anyone that's obviously invested into trading. So, okay, so that's fundamentals out and done with. Amazing. Let's go and kind of talk about what's happening in terms of Bitcoin. Okay, so huge fall. Okay, we got our bottom and we got our top of our range that has now formed, right? Amazing. So now we know the parameters that we're trading within, for now at the very least. Okay, hence why we managed to capitalize on the last two moves. Okay, this area just here was when the Fed's speech and Fed's rate decision came out. Okay, it was a bull trap and we called it. That is why we did not get involved in this move up here. Okay, we did not get involved in that. Okay, we do not trade. Okay, before huge announcements are made, and if we do, we make sure to be out of that in time, okay, before pricing in volatility comes in. Okay, do not trade important data points. Okay, let the market do its thing. That is the perfect timing for institutions to catch you guys out. Okay, stay out of it. Okay, let it play out and then enter, which is exactly what we did. We let the shorters to get cut out, as well as the longs to get cut out. Once it broke back down here and it closed, that's when we entered, and that's when we capitalized on the shorts. Unfortunately, one of them actually didn't come in, because what happened was that our selling or closing opportunity of that trade happened overnight, and unfortunately we were catching some Zs at that time, which meant that we weren't able to move ISL, and two, prices just moved too quickly. Whilst the other trade that we had open, which was AXS, but stayed relatively unchanged. By the time we were able to make a decision on the closure of the trade, we closed and we made profit as well. So it's one of them. Sometimes you can't win, sometimes you win. So nonetheless, it's still a fantastic week. Okay. So we are in a range at the moment. We're making a move down. Okay, so we're potentially likely to continue coming down, maybe to somewhere around this region over here. Okay, even potential a little bit lower. Okay, we'll see how things go. We could still actually get a push all the way up here and get a little bit of a spike. just towards the end of this week. We'll see how things play out. However, there is no need to overtrade this market. Things get dangerous when you start trading ranges. Okay, that's when institutions do their planning and basically catch people out. Okay, so you only really want to be trading tops and bottoms. You don't really want to be trading these mid sort of moves, because what will happen is if price can hold this level over here, it will just shoot up. Okay, when as well, when you look at things as things stand right now, they look like they're going to come lower, which again, as things kind of look like right now, is that they're going to come to some sort of this level down here. But again, just remember, we are now entering the very end of the week. So one volume does tail off. Okay, and this is 9 times out of 10. Obviously, last week we got that actual big move and big sell off. Okay, which again was a little bit unexpected and out of the normal. So that can happen, but we're going to stick with what happens majority of the time, and that is that volume tails off towards the end of the week. Okay, and we start seeing less volatility. So that's what we're going to expect. If things change, then we can make a decision at that time when those things occur. So we're looking at staying in the range, tapping bottom end, the sort of lower bound and second lower bound range points, as well as the upper bound and second upper bound range points as well. Okay, so we are expecting to kind of stay in a range for a bit, maybe even potential to next week and the week after, but we'll see how things plan. The way that we will be trading it is by trading once prices reach these bottom points, assessing price action, whether they're finding support at these lower bounds to then push up, which we will then look for long trades, and in terms of when they reach these high points over here is then when we will look for short trades. Obviously, the longer that price stays in a range, the more likely we are going to be experiencing a breakout. So you don't really want to be trading the range in terms of doing the opposite as to what things are doing. Okay, so in terms of when price comes down here, I'm going to go long, because as price goes along in the range, the more likely it is to continue breaking the bottom and upper range bounds. So you do need to be very careful, because once they do break heavy. Okay, so you want to be on the right side. But nonetheless, obviously, the way that you trade your ranges is by having a tighter stop. But again, it's hard, because the way that crypto works is that that's how the institutions gain the liquidity, is by knowing that you put tight stops at these points over here. So what they do is they spike price to those points so that you are liquidated, you are kind of stopped out, and they gain liquidity from it. So you kind of do need to be a bit experienced in terms of trading ranges. Okay, if you are not, the advice is to just stay out, wait for a breakout, okay, and then enter on the retest. So if we get a breakout of this lower range here, okay, what you will be looking for is a retest of that lower bound, and then that's your entry here to continue going down. Okay, that's the way you want to trade it if you do not have that much experience in trading ranges. Okay, or if you don't like risky trading, if you're a more conservative trader. But that is what we are looking at in terms of Bitcoin. The overall picture in terms of Bitcoin is bearish. We are still looking very, very bearish. Okay, we just discussed that fundamentals and things aren't looking good. Okay, so in terms of interest rate hikes, it's actually good news. As we could be seeing an influx of money coming into the crypto market as a hedge to more expensive borrowing of credit. So we'll see how things play out and how the institutions are going to move their money and diversify. Okay, But that is with time to come, and obviously with as interest rates actually get higher and higher, okay, it could be that the first interest rate hike doesn't have that much impact and you won't see that much money being moved about. Don't get me wrong, obviously there will be a lot of money being moved about. 0.25 of a rate hike is a lot of money when you're talking millions and billions of investment. Okay, that is small in the picture, but when you're dealing with huge sums, it's a lot of money. Okay, so you will definitely see money being moved about. So we've got total crypto market cap doing the same thing. It's still got space for it to come down. We did touch on this in the pre-market analysis. Okay, we've still got plenty of room to come down to strong support. Okay, so again, adding to the picture that we are still very much bearish, and that's something that we do really need to be keeping in mind. Okay, in a little bit of a range. However, we are still looking so bearish. So there is no inclination to that this is the bottom. Okay, we should still be thinking that it's coming down lower. What we should be doing is actually buying these dips here. Okay, we should be buying these dips. Okay, and adding margin to our portfolio. Because when things bounce, they're going to bounce hard, and then we are going to be making money as price goes up. Okay, so you basically add into these dips over here. Okay, and then when price continues to go back up, we put money on those dips going up as well. Okay, so we're making money coming down, making money coming up. Okay, or actually making double the money when we're going up. Okay, that's the way that we should be treating our investments. Dollar index absolutely flying. Obviously, we held this and we're pushing up higher. Obviously, the data point of 6.9% GDP growth has pushed dollar index to the moon. Okay, which is now also adding to bearish sentiment within the crypto market. Okay, so keep that in mind. We are continuing to push up higher. Okay, we are again at the next order block in terms of the dollar. So we could see a little bit of resistance. The way that it's looking is that we're going to just get a push straight up. Okay, there is a lot of volatility in terms of the fossil fuels. We've got the whole Russia, Ukraine, US situation. So if you trade commodities, an amazing opportunity to get involved in that. A lot of volatility in the most volatile commodity, which is obviously oil, and things are going to skyrocket, as well as natural gas is going to skyrocket as well. Okay, it's already skyrocketing, so if you want to capitalize in those markets as well, commodities are the one. Bitcoin shorts, Bitcoin longs, pushing up a little bit higher. Okay, people are putting a little bit of investment at this point here. However, it's not moving up substantially enough. Okay, so it's not giving the full indication that this is the bottom. Okay, we want to see a huge spike up in longs to give us that sort of indication that this is the bottom. Okay. And there is a lot of buying action that's actually taken over selling action. Shorts have actually fallen a decent amount, okay, but they have been going up for weeks, so they're naturally going to pull back a bit, okay, before they push up again. So there's just a little bit of a slowdown in the market, hence why prices aren't really moving. Okay, if you saw, if you were in touch with what's happening in the market in general, you will have actually seen that the altcoins were moving at a much faster pace than Bitcoin. Bitcoin hasn't actually really been doing anything, but the altcoin market has been doing a lot more. Okay, and there is mixed emotion. Okay, so we're going to be seeing that for a bit. Obviously, we're in a range, so we'll let things warm up for a bit before we start seeing big moves again. But yeah, apart from that, okay, we'll touch on the last one, which is Bitcoin dominance, finding a bit of resistance now, and pulling back. So hence why we are seeing a bit more of a faster pace alt market. Okay, we got support over here at about 41%. But again, you can see Bitcoin dominance has risen a decent amount. Okay, so Bitcoin is becoming slowly more predominant, which is basically indicating to us that a bit of investments now coming in. Okay, bit of investments coming in, as well as altcoins are bleeding. If you go on the altcoin chart, you can see that they are pushing for near all-time low levels. So the market cycles are starting to refresh. So give it a few months and you can be expecting alt season to really be pumping again. Okay, but apart from that, that's it. We've got nothing else to add. Hope all of you have enjoyed it. Hope that it's been as informative as it possibly could have been. If you guys have got any questions, please let us know in the comment section as soon as possible. We'll leave a couple of minutes for you guys to type out any questions that you do have. If you guys do not, do let us know as well, just so that we're not speaking to ourselves. But yeah, and then we can wrap it up after that. So we'll give you a couple of minutes. Let us know if you guys got any questions, and then we can go from there. Perfect, CoinFucker. You're amazing. Thank you for your participation. Every live stream, it's amazing. We love the commitment. We know personally that these live streams are valuable. Otherwise, we wouldn't actually do it. So we do these live streams due to the fact that we really didn't have them when we were trading. So we try and put out all the information that we wished we had back then. But yeah, amazing commitment. Thank you very much. And congratulations to an amazing trading week. It's been great. Making profit. We've entered 2022 truly in style, in sniper style. So let's keep it up. But yeah, guys, thank you for your participation. And we shall see you either Sunday or Monday for a pre-market analysis to touch base on the week ahead. So amazing. Thank you. Take care. And we'll see you in the new week. See you later.